The book explained why we got into this mess in 2008. Everyone was frustrated. No one really understood it. Lehman crashed. Of course, there was far too much excess debt and leverage. But ultimately, it was demographics. It was an aging population. We know that the population in America has been aging. We know that people spend the most when they're in their 30s and 40s. By the time they hit their 50s and later, they tend to save money for retirement. They're no longer in their peak spending mode. People spend the most money when they're approximately 48 years old. And it's all driven by family. People tend to get married in their early 20s, have children in their late 20s, buy their first home, late 20s, early 30s. And typically by the early 40s, they're having their first and second child, need a bigger home. And then around 48, 49, the children leave the home and then go off to college. They leave the nest. And you typically spend less when the children are gone because you're no longer driving around on 2 or 3 tanks a week, taking Junior to soccer practice and football and baseball practice and ballet class. And you just tend to spend less and start saving for retirement. So we had an aging demographic, an aging population, not only in this country, but across the entire developed world. And so if we know people spend the most in their 30s and 40s, we can identify why the 1990s and early 2000s were so good, because the largest segment of the US population in history was in their 30s and 40s in their peak spending. By around the middle of 2000, 2005 or so, people started getting older, spending less, and the entire economy slowed down because of that. So it was a demographic slowdown. And in 2007, 2008, after the market started to crash, the Federal Reserve did, well, anything that they could, and they revved up the printing presses, cranked out trillions of dollars in debt, in quantitative easing and stimulus, which essentially staved off another crash. The problem is they can't do this forever. You have to repay debt at some point. And so with the Fed tapering down their stimulus, and we still have an aging demographic, can the country come back and still grow like it did? And unfortunately, not until the next economic boom, not until the next baby boom generation, which is the echo boomers. Those are the children of the baby boomers. Those are the ones born from 82 to 94. They will push the next bull market. Unfortunately, they don't reach their peak spending until around 2020, 21, 22. So for the next 5, 6 years, it's going to be very difficult times. We're going to have deflationary environment. We're going to have higher unemployment than normal. The people with money most likely will continue to have money. But unfortunately, the country as a whole is going to be growing much, much slower than normal, higher unemployment. And then, of course, we have all the entitlements from Social Security, Medicare, Medicaid, and such that the government has to deal with. 65 cents of every dollar gets spent on that. Paying off debt is an additional. So when you continue to pay off these types of debts, that's money that cannot go into more investment into the economy, into the country. So the book was designed to give the average investor a better understanding of what's going on in the economy, where we're headed, and what they can do about it. So in the book, it talks about why we went through the crash and the crisis, what we're up against in the next 4, 5, 6 years, and how to position your portfolio to take advantage in order to get the best returns, but with the least risk possible. That's the key. Invest for need, not for greed. If you don't need all the risk, don't take it. You're only going to hurt yourself. Prepare your portfolio so you can make money in any market, and so it doesn't hurt you, especially as if you're retired or if you're approaching that retirement red zone. You want to make sure that you don't have another 5, 6, 7 years of break even or losing money and losing sleep and all that goes along with it. We don't need that. The book's available on Amazon. It's in the top 10% of all Kindle downloads. It has been since the day it came out. I'm very proud of that. I've made it very accessible, very inexpensive, because I want everyone to read it. However, I always offer, if anybody would like to come in for a review, we offer a free review for investors. I'd be happy to give you a copy. It's that important that I think people need to read it and get it out. I'm not looking for book sales. I'm looking for an educated population and clientele. The book should give you a good understanding of where we've been, where we're going, and what you need to do about it.